What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to cover what to expect within the week as we approach a very important one with the release of the FOMC minutes, as well as the most anticipated earnings of the week, and that will be going to NVDA. I quickly wanted to share and explain what the FOMC minutes are, as I do see that there's some confusion between what that is versus the FOMC meetings. So really quick, the FOMC minutes just refers to the detailed records, better known as the minutes, of the FOMC meetings, which are held approximately around 8 times per year. So the FOMC is a key component of the Federal Reserve System, and it's responsible for making important decisions regarding the monetary policy of the country. So during these meetings, committee members including Jerome Powell and other regional Federal Reserve Bank presidents discuss economic conditions such as inflation, employment, and other factors that could influence the U.S. economy. They go back and forth in debating, making decisions on monetary policy, such as interest rates and asset purchases. So during these FOMC minutes, which are released 3 weeks after each meeting, provide a more comprehensive look at the discussions that took place over that meeting. So as investors, we have to be able to analyze closely what these minutes could potentially mean. That way we can get a better insight into the committee's views on the economy and potential future policy changes, as well as the overall direction of the monetary policy. So the release of these FOMC minutes can have a potential significant impact on the market, so it's going to be very important to see what the FOMC minutes do say within that report. So if you want to stay tuned as we analyze both the technical patterns, make sure to hit that subscribe button, ring that notification bell so you never miss a future video. But before we get into that, I do want to preface by saying I am not a financial advisor. None of the things I say in my video or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the charts. Jumping over to SPY here. So SPY on the daily does still have this bearish harmonic pattern, which is a shark pattern. Obviously is extended above half, so you can see like this maybe pattern has been invalidated. So I do think there's a potential bigger harmonic forming on the more macro time frames. So if we go over it really quick here to the 2-day, you can see that there is a bat pattern and as well as a bat pattern on the 3-day chart. So right now on the bat pattern for the 3-day, you did close above hop what 498.57. Friday you closed at 499.51. So it's going to be interesting to see if we do get a few more candle closes above this target here. If we do, that means there could be more continuation to the upside. Otherwise, if we do lose this level here, I'd be looking at this pattern to potentially play out for that reversal. More macro, this is coming down for the target one at 428.10, which would complete the type 1 reaction. Obviously that's still too far down the line. We'll see if this is just a retracement, maybe back to the 21 EMA where the terminal bar is at 473.73, which I do believe is a very important level as well. If we go over to the daily we did high volume selling on Friday. It was a little bit bearish towards the end of the day, where you managed to lose that $500 psychological level and close the day at 499.51. So if we go over here with my drawings, I know there's a lot of lines here, but bear with me. Should spike find some resistance here, on the next level I'd be looking for this to lose would be that 497 area here at 497.80. On Monday you did go as bearish all the way down to 490.72, but managed to close the day above the 13 EMA here around 493. So the next level, if you lose 497.80, would be to retest where the 21 EMA is. More specifically, I have this line at 491.42. Lose that level and you do have a gap fill. I know it's hard to see, but there is a gap fill right here around 489-ish and change. Below that, you do have another gap level here around 482, 483-ish. So obviously below losing those levels here and losing the 50 would come back all the way down to that 465. It's too early to call that, but jumping over to the weekly here, I wanted to quickly share some findings here found from the harmonic pattern indicator here. You do have this hanging man, potential hanging man here, which could potentially mean a reversal is incoming, right? It was high volume selling, and you do have this potential bearish harmonic forming. So I want to see if this actually forms as soon as tomorrow. If it does, obviously there's still a hop level, which could mean you could push towards that $515 target I do have as a next level should it continue pushing. Otherwise, if this is a harmonic pattern that is generating here and it forms the level point D here, that would bring down for a type 1 reaction. You could see this go back to 444 for target 1, and then 618 would be 407. This is obviously on the weekly chart. That could take some time if it happens, right? Doesn't mean just because the bearish pattern is forming that there's a potential for this to go all the way to target 1. So it's still too early. You could just come down for a little retracement here and then go back to make higher highs. And I do think that's going to be dependent on whether or not NVIDIA reports good earnings or not. So definitely keep an eye on the SPY. Jumping over to the triple Qs here. So the triple Qs, just like the SPY, has the same pattern, the shark pattern, a bearish one, obviously extended above HOB. On Friday it closed at 430.57, and I just wanted to grab your attention here with the volume was high selling, obviously surpassed the 2 previous candles. So what can we expect here? Just looking at the Qs here on the daily without having to look at the harmonic, because obviously this is extending, which could potentially mean a more macro bearish pattern is forming on the higher time frames. So just from looking at this, at the next level I'd be looking at would be the 21 EMA as support. As you see that a few times it has come down to test that level, has found support above it, and the only time it actually came below it for a false breakdown was in early January. So it managed to come down below but managed to break high and create higher highs and higher lows. So the next level I'd be looking at here just off the daily would be 426.92. Obviously losing that level, you come down to that 415 range, but I wanted to quickly jump over to the 2-day here, because the 2-day you do have a more macro extended version of the 1-day pattern, the shark pattern here, where you do have OB at the 1.13 other shark pattern at 428.79, where you managed to close 2 days above that. So if we can get another close above it, potentially mean, obviously want to see high volume with that. It could mean that there's continuation for the triple Qs, and that next level would be HOP at 450.72. Should you not be able to hold that support level here above 428.79, then you could look towards that 21 EMA here, more macro. Obviously on the 2-day you have the 21 EMA here at 418. As you could tell, the only time it came down below 21 was back here in October. So it's been so far riding above the 21 EMA, finding support above the 13. So if it does come back down here, you could potentially start looking for that type 1 reaction, and the type 1 reaction to complete that would be at target 1 at 342.06. Obviously too early to call that out, but if you do lose this OB, next target I'd be looking at, especially if you lose a 21 EMA, would be that terminal bar here at 391.41. Off of the weekly, you do have this potential shooting star here as well. Still managed to close above OB. This is a more macro harmonic on the weekly chart here with this bearish shark. Same pattern, but calling for a higher high here at HOP at 445.47. Obviously losing OB at 424.12. You would come back down to the terminal bar at 387.98. This is obviously on the weekly chart. This could take way longer to play out, but if we're looking at this harmonically, you managed to close 1, 2, 3 weeks now above OB here. So technically you could be looking for that higher high at HOP at 445.47, but in order for that to happen, I would definitely like to see that with high volume, because the weeklies did show increase in selling during this week. So very close to see what the Qs could potentially do, and obviously everything is going to be all eyes on NVIDIA to see if there's going to be continuation to the upside or not. So definitely keeping a close eye on the Qs. Jumping over to the Dow Jones here. So the Dow Jones does not have a current harmonic pattern on the daily, but I just wanted to quickly share here my thoughts on what can we expect just looking at the daily chart. Just like the SPY and the Qs, it has found support above the 21 EMA, so that's the next level I'd be looking at, would be around 383 and change. Obviously on Friday you did have high volume selling as well. So what can we expect here harmonically? If we jump over the 2-day, you do have this current bearish shark pattern just like the other two indices. You are creating harmonic bearish bat patterns on the more macro time frames. Obviously this is above HOP at 381.8. 381.10 was HOP. It's closed on Friday at 386.19, so you are above here. It looks like for at least for the better part of 18 days above HOP. So what can we expect? If there is a reversal here to the downside, the next level I'd be looking at HOP on the 2-day. If you lose that level, you come down to the terminal bar at 378, then maybe you get a drop to that 360. The shark pattern is calling for a type 1 reaction to target 1 at 332 down the line, but it's too early to tell. If we go over to the weekly here real quick, we do have this indecision candle, which could mean a reversal is incoming or a consolidation period is about to happen. Roughly at the next level I'd be looking here for the triple Qs. You can look at these targets for next targets. So if there's more continuation, you could take a fib retracement from the previous all-time high, which was right here on January the 22nd, to the lows of October. The next level is the 127% retracement at 392.04, which has yet to hit. You could also take a fib extension, the most recent swing high is the swing low, and back to the swing high by taking this level here from October lows back up to this point, and then the most recent lows, which was on October the 23rd. of 2023 here, and that next level is pushing above the 886, which is at 385. The next level is 100% retracement at 392.95. So there seems to be some confluence there around 392 to 393 as the next level of resistance. Above that, then you have a 411, and if you do take the fib extension, or the fib retracement, excuse me, from the most recent swing high here to the swing low, that next level is a 2618, so around 410. So there seems to be that confluence level for the Dow Jones around pushing above 393 to that 410, 411 range. Obviously, there's going to be a psychological level at 400, which is around $14 from testing. So definitely keep an eye out on the Dow Jones. Jumping over to IWMs here. So IWM had a very interesting week. Obviously, on Monday, you did come down 4% for the day here. Very bearish close with high volume. So it seems to be that 200 plus level, 205, 203 level has been resistance here for IWM, and you dropped 4% on Tuesday, which you managed to reclaim and create a higher high on Thursday, which you closed about 204.44, and then on Friday you came down for retracement to roughly above XA here, where you closed at 201.66. XA is at 201.55. So right now we do have this bearish crap pattern at play. So what can we expect here? It looks also, just from looking at this is a W formation, which means in harmonics a W formation is a bearish harmonic pattern potentially forming. I haven't drawn out the ratios here, but there seems to be some confluence. As you can tell, there is a gray pattern here, meaning that there's a potential pattern being confirmed here soon. So if this does reach around this level, that's calling that 208.09 level at the completion of point D, which could generate that bearish harmonic, and you come back down to your type 1 reaction. So it's still not clear yet. This still has room to push higher for that pattern to even form. If it doesn't, then this pattern is going to get invalidated, and you might just be playing out this bearish crap pattern to hop at 211.69. I do think there's going to be a level of resistance here at that 205 again. So what can we expect here just off of the crap pattern is, if it doesn't hold XA, you can come back all the way down to the next level at the 90 MA. I do think there is a slight gap, if I'm not mistaken here. It's a very minuscule gap right here. So that gap is around 199 and 80 something cents here. It's a very, very short gap. Lose that level, then you can come back down to the 50 EMA, which is roughly around 193. So anytime you come back up to this area, it looks like you come down to the 50. So that's the next level I'd be looking for support. Losing that level, and then you come down to test target 1 at 186.70 like you almost did back here. So if we jump over to the weekly to see how we closed, that is a high volume weekly candle on the weekly. So right here, there's just been so much resistance at this level here. I draw this horizontal line just at this point here. You could argue this was a 1, 2, 3, 4, 5 attempts now at breaking that level. And anytime you've come around this area here on the $205, $200 range, you have been smacked down. So right now this could also have been a double top, and you could be coming down for a retracement. So very unclear to see what IWM is going to do at this point here, but it is trying. If you fail, then you might be coming down again. Anytime you fail this level around the 205 range, look what it's done in the past. During this period here in August 22nd, you came all the way to 160. Over here back in January, you came down to around 167. And then most recently here in July the 23rd, you came from almost testing at 200, and you came down all the way to 161. And now at this level here for December, you came to retest the 200 SMA on the weekly, which was at 187. So it's, at least for the most part, finding some support here. It looks like it's trying to break out, but we'll see if the market is going to allow that to happen. So definitely keep an eye on IWM. Jumping over to XLF here, the financial sector currently has this bearish butterfly on the daily. So what can we expect here for XLF? Obviously, you had very high volume buying on Wednesday and Thursday. Friday, you had very low volume to the sell side. So right now, you do have hop at $39.93. Maybe there is that psychological level at $40. But right now it is finding some resistance here, almost at that $40 range. So the next level I'd be looking at, if it doesn't find support or find breakup above $39.93, would be to test XA here at $38.92. Losing that level is a 21 EMA roughly around $38.78. You can come down to $38.33, which is BC of the butterfly pattern. As you could tell, just like the other indices here, with the compared to the triple Qs, the Dow, and the SPY, XLF has also found support above the 21 EMA. So you can look to get at least somewhat bearish here if it loses a 21 EMA. Short-lived though, because the last time it did come down here, it just retraced and created a higher high. If we go over to the weekly seems to be continuation and increased volume here compared to the previous week. You have this blue pattern forming here, which is indicating that a bearish harmonic pattern could be forming here really soon. Obviously this could be invalidated if it creates a higher high, but you have some confluence as well here with the bearish harmonic on the weekly, which is a butterfly as well. 39.93 is that level of resistance here. If we go over and turn the reversal sequence indicator, you're seeing that right now it did say that it was going to come back for a retracement, but it's now creating higher highs here and not really a point of resistance here just yet. So we'll definitely have to keep an eye out to see if there's more continuation, because a break above 40, you could be looking at the potential highs here for XLF to retest, which is at 41.70. Obviously a break above that, then you start creating higher highs and new all-time highs for XLF. So financial sector right now looks to be kind of finding some support above here, so with high volume, so definitely keep an eye out on XLF. Jumping over to XLE here, the energy sector currently still in this bullish Gartley pattern, where it looks like it's now potentially forming a head and shoulders here. So it's at that neckline where roughly target 1 is around 85.88. So what can we expect here harmonically? He did cross the HSI midline, so if this continues to find support above target 1, 85.88, that inverse head and shoulders could play out, calling for target 2 at 88.86 potentially. Should you find resistance here at 85.88, the next level I'd be looking at would be retest the 200 EMA, which is the breakout here that you got on Thursday. So the 200 EMA is around 84.44. Lose that level where you had some chop here, which is kind of waking back and forth, and finding support here is around 83.28. You did come down to 82.51 here, and you came all the way down here to 78. Should you lose this level, specifically 82.51, you'd come back to test XA again, and then maybe all the way hop at 77.79. If we jump over to the weekly here, we do have this bearish crab pattern still at play. Looks like XA has been resistance here, and right now it's kind of trying to see if it's going to continue pushing and breaking out here. This is creating lower lows here and lower highs. So if this is a lower high, you could come back to potentially create a lower low, and what that level is at is looking at maybe around here, around that $77 range. Below you do have the 200 EMA here, which is at 73, and you do have a gap fill there. Should you continue breaking out of these lower lows and lower highs, which would be shifting the momentum, if we take a fib retracement from September 11th here to the lows, you are currently above the 382. You're knocking at the door at the 50% retracement, which is 86.33. You break that level and close around the 618, around 80.87. That is changing the momentum, and the MACD is obviously really close of also flipping green as well. So in my opinion, if you do get that close above 88.07, you shifting the momentum for the energy sector, which could potentially create higher highs and higher lows. So right now you do have a potential pattern confirming it could get up to here, which is a bearish harmonic, by the way. You come up here, it's calling for 95. Should it form, this is not obviously a confirmed pattern, it is a potential, meaning that there's still, if this does come up here, you will come back down potentially for a type 1 reaction, as this is a bearish harmonic. But that level at the completion of point D is calling for 95.94, just call it 96, maybe even to $97. So anywhere between 94 to 97 would complete that point D. So definitely keep an eye out on the energy sector. Jumping over to Apple here, so Apple shark pattern, bearish shark pattern on the daily, a little bit bearish here on Apple. It's looking like it wants to come back for another retest of the 200 EMA, which is around 180.62. You did lose on Friday, target 1, where you close below it at 182.31. So what can we expect here harmonically for Apple? As I bring out my drawings, seems to be something going on here with Apple, but it is finding support at 200 EMA. So if it finds support again, maybe you can come back for a W formation here, which would be another bearish harmonic pattern. It's still too early to call out, but this could be a double bottom, meaning you would come back up here to that maybe neckline here, back to the 190 level, and finally break out to see if you can reclaim terminal bar here at 194.40. My opinion, this level, terminal bar, if you need to get bullish on Apple, would be above that level, more specifically 198. The terminal bar here, as you could tell, since Apple has found resistance here at 198.93, where the completion of point C here off the shark pattern was, you came and tried to hold above terminal and you weren't able to hold it, and that's ultimately where you came to complete the type 1 reaction and tried again to stay above the terminal bar here back in January and failed. And so that level here seems to be a quite important level for Apple. So if you don't find support here below the 200 or above the 200 EMA, I should say, the next level you'd be looking at would be 169.54 to complete the type 1 reaction at target 2. Right now the HSI is approaching the over sold conditions, so you could generate a potential HSI arrow back up, but you want to see that at high volume. If you see that, then maybe you can start looking at an attempt to reclaim 182.65 here, and then more specifically 183.72. Above that you do have a level of where there's a gap at 186.73, and then you have 188.73. So that's what I'd be looking at here for Apple. If you're looking at the weekly here, there seems to be an information here. Ultimately, that if this is an information here in harmonics, and if we follow fib ratios, then that it is potentially a bullish harmonic, but you would maybe start creating a lower low before that happens. So definitely keep an eye out on Apple, as I do think it's very important to see how they're going to do, because if they lose that 200 EMA and they start getting very bearish, then it can have a potential indication here for the market to come down slightly. So definitely keep an eye out on Apple. Jumping over to Microsoft here. So Microsoft on the daily does have this bearish ABCD pattern. So what can we expect here harmonically? On Friday, you did close at 404.06, which closed below ABCD here at 406.71. The 21 EMA so far is finding some support here, but it has come down here to test the 50 like it did here back in January. That 50 EMA SMA is roughly between 391 and 390. Obviously, losing that level, you would complete the type 1 reaction at 354.49. Right now, the HSI is approaching these oversold conditions, and that could be just roughly in between where the 21 EMA is and the 50. So right now, to the upside, if you're able to manage to close above ABCD at 406.71, the next level I'd be looking at would be the gap filler around 414.62, and then to reclaim hop at 419.35. If we jump over to the weekly here, the weekly did increase in selling here slightly from the previous close and almost engulfing that candle. So definitely it's interesting to see if Microsoft, if this candle here for the weekly is indicating that a potential reversal is incoming. Right now, you did just all you did from that last week is you closed below the 70 RSI level. So maybe you come down to test that 397, maybe that psychological level at 400 before you find support. Obviously on the weekly here, you found support above the 13 and reclaim the 9, so that could be a level where you come down to. So I'd be looking at around 397 and then that 386 before testing where the 13 EMA is at, and then to push continue higher for Microsoft. There was some maybe thing had to go on with why there was some selling here, as we did have the dividend date here for Microsoft on Wednesday the 14th. So definitely keep an eye out and see if there's more continuation to the downside here for Microsoft. Jumping over to Amazon here. So Amazon on the daily currently has this bearish ABCD pattern where it closed at 169.51 on Friday. So what can we expect here for Amazon? The HSI did cross that midline here, and if it does come to these oversold conditions and loses that level of support above the 13 EMA, the next level I'd be looking at would be the 21 EMA, which is around 165.40. Losing that level, you come down to test hop here at 162.25. Below that, then you probably will fill the gap here at 159.76. As you could tell here, the last time it lost the 21 EMA, it came all the way down to touch the 50. So if it does lose that level, I'd be looking at Amazon to be around 156.35, and then maybe complete the type 1 reaction at 153.25. So to the upside here, if I want to go over to the weekly was high volume selling here compared to the previous week, and you did close on the weekly with this hanging man candle, so that could be a reversal candle back down to maybe, like I said, fill that gap, maybe test hop here at 155.75. As you could tell, the 13 EMA for most of these blue chips have been support here on the weekly. Above this level, then I do have a level of continuation for Amazon to test 188.65, which was the previous all-time highs. So that's the next level I'd be looking up to the upside here, as you do have if we look over to this Amazon bullish crab pattern that had back in 2021, the next level I'd be looking at here would be the 786, which would be 170 682, and then you have the 886 at 182, and then you have that confluence there where target 1 is at 188.11. Above that, then you may be pushing towards that $200 level for Amazon. So Amazon has yet to create new all-time highs like some of these other blue chips have already, so let's definitely see if there is going to be more continuation on Amazon. Jumping over to Tesla here. So Tesla current harmonic pattern here on the daily has this bullish Gartley where at the completion of point D, you've been trying to stay above here to start the type 1 reaction to potentially target 1 at 222.46. Right now, you did close 2 days now above the 21 EMA. You actually broke above the 21 EMA, and if you're going to break something, an important key level here, especially if you follow the 21 EMA, you definitely want to retest the next day to see if there's any support above it, and that's exactly what it did. You came down to test the 21 EMA, and you closed above here for the second day. So the next level I'd be looking at here for Tesla is to complete this gap fill, which is around 206.77 here. If we manage to close above that gap fill, then next level resistance would be at 211, and then target 1 would be at 233.48. I have 223.79 as a level of resistance. Either way, if you test that level, you can complete the type 1 reaction, in which case you could come back down to for a type 2 return to hop there, but obviously that's too early to tell. Should you find resistance and lose the 21 EMA here and not able to hold it, the next level I'd be looking would be the 9 EMA at 193 and change, and then coming to test XA at 183.81. Below this, it starts getting very bearish at 174.44, where you do drop. You can potentially come down to complete the type 2 return to hop, roughly where that gap is at, so calling 145.61. Right now, you might have some resistance based on the harmonic indicators here where the HSI is approaching these overbought conditions, so you could maybe fill that gap, generate an HSI arrow, and maybe you start creating higher highs here and then higher lows. For retracement, you reset the HSI and then continue to complete that type 1 reaction down the line. So if I go over to the weekly you do have this also Gartley pattern on the weekly, and you did generate an HSI arrow to the upside here. So this could potentially mean that it's looking to go to that target 1 at 225.61 and target 2 at 253.74 down the line. Obviously, losing this level here, very important because you are testing the 200 EMA. It's trying to claim the 200 EMA anytime you're below the 200 EMA on the weekly. It's a little bit bearish, so if it does break above that and then maybe down the line around that 222 and change where the 200 SMA is at, then you could look at maybe to see if this starts to create higher highs and higher lows, and maybe it does a V reversal back up here to reclaim what it lost. So definitely keep an eye out on Tesla. Jumping over to Google here, so Google does have this bearish deep crab on the daily. As you could tell, it completed the type 1 reaction here, obviously on earnings. You found support, almost completed the type 1 reaction to target 2. You could argue it kind of did since it got really close, but it came back above XA where you found resistance again, and you have a bit of battle going on here with indecision candles, doji candles, and you have this hanging man, and now a increase in volume to the downside where you closed below target 1. And on Friday you went at 140.52, so you lost the 50 SMA here. You got the 921 crossover to the downside, so the next level I'd be looking at here for Google would be this level here on the lows from Friday the 2nd here, which was at 136.50. Obviously below that you have the completion of target 2 here at 135.73. Losing that level, then I'd be looking at test the 200 EMA and SMA where roughly it's around 130.127, and I do have a more harmonic key level here at 128.71, which would be very bearish. So it's interesting right now for Google. I'm not sure what's going on with this thing, so you could just come back for a double bottom, right, and then you come back for a higher high down the line. So if we go over to the weekly here, you do have this bearish shark pattern at the completion of point C. You're not able to break above terminal bar here at 153.05, and now you're losing the 886 of OB of the shark pattern at 143.72. So roughly here, the 21 EMA, the next level would be at 138.03, and the last time it tested the 50 was back here in October, and that's exactly at 129.65, which is roughly around my harmonic line here. Obviously losing that level, it completes a type 1 reaction to 118.56, where you do have another gap fill there around 112, 113 and change. Should you're able to find support of the 21 EMA, you want to reclaim OB and then specifically claim terminal bar here at 153.05, where you'll be looking to make a higher high to hop at 161.10. So it seems right now that Google has yet to create new all-time highs or close above the previous high here, which was at 150.155. Here you did get at 153.05, but still haven't closed above that level here. So definitely keep an eye out on Google. Jumping over to Meta here. So Meta closed on Friday at 473.32. Right now it's not really clear to me what's going to happen here with Meta. To me, just from looking at this range here, it looks like it's just trading between 486, 487, 489 and change to the top of the entrance of the gap here around 450s. So it could be generating a pattern here. It's still not clear what that pattern is to me, at least yet, and I think it do need a little bit more time to see what that is. Or you could just start consolidating here, waiting for the next leg up or down. You had the dividend date here on the 21st here for Wednesday. So you do have this gap fill, which closes at 450. If we go over to the weekly here, it's very strong volume, obviously due to earnings, and then you had that what looks to almost look to be a hanging man with low volume, and then you managed to close just this week above the previous candle, so off of slightly decrease in volume. Right now the HSI, the RSI, the AMP RSI completely overextended, overbought on the weekly. So right now, to me, right now Meta just looks to be in the consolidation phase, entering a consolidation phase, maybe establishing a new volume range profile here. Too early to tell, but for me, I'd be looking to wait to see what Meta does at these ranges. So definitely watch out for Meta. Jumping over to NVDA here. So NVDA on Friday closed at $726.13. Right now there are currently no harmonic patterns on any of the macro time frames here, talking about the 1 day to the 1 week, because this thing continues to push even higher, so there's no clear M&W formations here. So what can we expect here for NVIDIA? Just using fib extension and fib retracements and just looking at the fibs, I did draw a line here at 732.10 cents, where it looks like it's been finding some resistance here, and it's in that range between 681 to that $732 level. Right now the RSI is completely overshot. The HSI did cross the midline here, indicating maybe there's some downside to that 681. Obviously they report earnings on Wednesday, so everybody's going to keep a close eye on that, as if they do continue to destroy in earnings, continue pushing higher, this thing could go way above 732 here. I have not drawn that next level, but I think the last time I drew it, I do remember it being around the high 800s, maybe 900s. I don't know. Everything is for the semiconductor space is pushing even higher. There could be a psychological level where NVIDIA reports very good earnings, and maybe it starts going towards that $1,000 level. But right now, if we look over to the weekly here, the weekly, you do have an indecision candle here. It's completely oversold here on the RSI, HSI, and AMP RSI. And if I quickly just wanted to share here my reversal sequence indicator, as you could tell here, it is on the 9th candle here, which could indicate that a reversal is incoming. Obviously you need confirmation. That indecision doji candle could be a long-legged doji candle, could mean reversal, but it could also mean there's continuation here. Obviously it's all leading up to what earnings has to say, but if there is here, you want to have confirmation. Maybe this candle that opens up is that confirmation. Do we get maybe a shooting star hammer candle or whatever reversal candle up here for the weekly? So definitely keep an eye on NVIDIA, because the reversal sequence indicator right now is indicating that a potential reversal is incoming. If it doesn't, then you may be entering a countdown phase, which could just mean some chop and then continue pushing higher. So definitely keep an eye out on NVIDIA. Jumping over to Netflix here. So Netflix closed the day on Friday at 583.95. Completely bullish breakout here for Netflix. I was bullish on this during the week to that 580 target there, and it did close just slightly above that. So what can we expect here? Harmonically, we don't have anything on the daily right now. You do have a gap fill here that it left here from earnings here. So that gap fill gets closed at 498.96. So definitely a little bit far away from that level. Want to jump over to the 2-day and bring attention to the bat pattern, the bearish harmonic bat pattern, where you do have XA here at 568.41, and now you managed to close 2 candle closes here, which is 4 days above XA. So harmonically, the next level you'd be looking at if there's continuation with volume to the upside would be to test hop at 685.17 down the line. Obviously, this is on the 2-day chart, which could take some time, but if you lose the 568 range here at XA, the next level I'd be looking at would be the 21 EMA. As you could just tell that's the last level of support here that it has tested above the 21, which is roughly around 534 or 533. Losing that level, and then maybe you could see this complete the type 1 reaction at 420.37. Off of the weekly, if we jump over to the weekly here, you do have high volume buying here for the weekly. You're overextended on the RSI, but the HSI signaling that it could potentially push even higher to test that hop level at 630.74 from the old ABCD pattern here on the weekly. Above that, then you obviously have the all-time highs here, which is at $700.99. So definitely keep an eye out on the on Netflix here to see if there's more continuation. One thing I do want to bring out to your attention here is that on the weekly, you are about to have a golden cross on the SMAs here. So you could have a situation where you maybe retrace a little to create a higher low potentially, and then go out and play that higher high down the line. Obviously on the weekly, golden cross could take a month, 2-3 months. I'm not sure, a long time here, maybe gradually just going to push higher and high over time. So definitely watch out for that level for Netflix. Jumping over to Bitcoin here. So Bitcoin currently is at 51.7K. Right now looks like it's consolidating here. Maybe some candles here formation is potentially forming a pattern formation here. Obviously too early to tell. No current harmonic pattern on the daily, but if we jump over to the 2-day, you'd have this bearish deep crab where you finally broke out of the terminal bar. I mentioned that if you break above the terminal bar here with volume, that you would potentially hit up that level at hop above 50.1K. That's exactly what happened. Right now the HSI, RSI, and AMP RSI completely overbought. So what can we expect here as I bring your attention to the weekly chart here, because right now there's no really harmonic pattern forming, but you do have a pattern pending forming here for Bitcoin. This would be a bearish harmonic pattern forming potentially. This not still that still hasn't set in stone yet, so that could be anywhere between 53K all the way to 68K. Just call it the all-time highs, where you could potentially come back for a type 1 reaction, bearish harmonic. So if that is the case here, if we take a fib retracement tool all the way, let's just say to this point here, you'd be looking at a retracement to 43K and then maybe 32K down the line. Or if you go to the 69,000 level, you're looking for a retracement back down to 48.4, just call it 50 for the type 1 reaction to target 1, and then target 2 would be 618 here at 35.8 down the line. So it's going to be very interesting to see right now what Bitcoin has in store for us here, if this is going to continue pushing to maybe that 60,000 psychological level, and then the all-time highs at 69,000, and then to see what it does above 69,000 if we start going to that $100,000 psychological level everybody's been looking at. So definitely keep an eye out on Bitcoin. Having said that, guys, that's all I have. I will be streaming same time as always tomorrow, so if you want to catch me, link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your day, and I'll see you guys tomorrow. Take care, everybody, and peace.